there's an epic game of tug of war going on all around interest rates, and it's going to have a profound impact for everyone's investments and their financial plan. Welcome to the Modest Millionaire, and we're going to be talking about interest rate changes and how it impacts you. At GNZ Financial, we have the distinct privilege to work with a lot of clients that we call the Modest Millionaire. And if you've built your wealth the old-fashioned way through hard work and dedicated savings, if you've accumulated a net worth of $1 million or more, or you're working towards that goal, and if you're concerned about all of the economic and market uncertainty out there, and you're looking for ways to manage risk, and if you're hoping and praying for a better life for your kids and grandkids like we are, then you're in the right place. You're a Modest Millionaire, and welcome. So let's talk about interest rates. I love this chart. It provides a great summary of the trend over the last couple of years for interest rates. And we see, in 2016 and then in 2020, 2021, and in 2022, interest rates were almost zero, right? And we were getting, really nothing on our checking and savings accounts. And then since 2022, we've seen interest rates skyrocket. This was as the Fed was fighting inflation. We know inflation went through the roof. To fight that, the Federal Reserve also increased interest rates. And so now we are getting, 4.5%, 5%, interest on our checking, savings, and CD accounts, and it felt great. Well, and again, over the long run, we've seen interest rates go up. But as I mentioned before, there's an epic game of tug of war going on between the White House trying to pressure the Fed to decrease interest rates, boost economic stimulus, and kind of boost the economy. And then the Federal Reserve, they're trying to balance inflation, unemployment, and the pressure from the White House. So this game, this tug of war over interest rates will have a profound impact on all Americans, including your investments and savings. So let's look at that in a little more detail. So again, that's that chart. We've seen over the long run a nice upward, tick in interest rates, but we've already seen one cut in interest rates already. Will interest rates continue to go down? That's the big question, and that's what is going to impact your your investment strategy. So let's talk about some of those things. What are some of these things that are really sensitive to interest rate cuts? So our CDs, or certificate of deposits, those are closely tied to prevailing interest rates. And so when you hit that maturity of your CD, when that term expires, we would lock in lower rates. So there is a refinancing risk to CDs. I still love CDs as a way to manage risk and get some higher returns, but we know that dollars losing value, and when we refinance or renew those CDs, there's the impact that they'll be at a lower rate. So we want to continue to watch, CDs. And when you expire, what's the best strategy for you? Money market funds. So we have, a lot of Americans have significant money sitting in money market funds before we were getting, healthy returns. But we see interest rates are already coming down on those. What's the best strategy for you? If you have more than 3 to 6 months living expenses sitting in a money market account, let's talk about some strategies for you. How can we make certain that money's continuing to work for you while we're managing risk, especially as those rates continue to go down? Fixed index annuities. So these are annuities issued by insurance companies and annuity companies. And it's really based on the underlying interest rates when you first took out that annuity policy. And when the Fed decreases rates, we typically see lower rates in those fixed annuities. So they're guaranteeing you a lower interest rate. And over the years, we've seen some good annuities, some bad annuities, and a lot of ugly annuities. So especially in this new interest rate environment, we want to kick the tires on those annuities and make certain you have the best strategy for you now and over the long run. And treasury bonds and notes. So generally, treasuries increase in price when rates decrease. So there's an inverse relationship here. So we do see some potential growth from bonds. And typically the duration, the longer the note, the longer the bond, the more sensitive it is to interest rates. So, a 6-month note or bond is going to have less of an impact than a 10-year, 20-year, 30-year note or bond. But we still see, that's subject to demand. And, with the US national debt at all-time highs, we're seeing more and more people move away from promises from the US government. We are trying to manage all of those risks. And high yield corporate bonds also are impacted by interest rates, but they're also impacted by credit risk. High yield bonds, we like to joke, when they're doing well, we call them high yield. When they're doing bad, people call them junk bonds. So these are bonds issued by lower rated corporations that have more credit risk. So there's multiple impacts to how prices are in interest rates in fact impact those high yield corporate bonds. Dividend paying stocks. So typically, lower bond yields make dividend paying stocks more attractive. So this could potentially increase the stock price. So there's kind of an indirect relationship there. And then REITs, also an indirect relationship. This is real estate investment trusts. Typically, they benefit from lower interest rates, and so they can, buy real estate, refinance their mortgage and debt on that real estate at lower rates. So potentially increasing valuations in the stock price. So again, a lot of impacts on all these things. If you have significant money sitting in, CDs or money markets, if you have some fixed index annuities, or if you're just looking to manage risk in all of this uncertain times, let's connect. We really are here to help you and the Modest Millionaire family. So a couple ways to connect down below. Subscribe and follow us. Check out our website or schedule your mini consultation. This is complimentary for the Modest Millionaire family. Schedule a 15-minute Zoom using the QR code there. In that meeting, we're going to talk about your unique situation and your path towards a great financial future. Thank you so much for watching. Take care, stay curious, and keep on dreaming big dreams. Talk soon.